We didn't move CSL to an ad rating overnight. Yes, I'm sounding like a broken record. You all know that I've been talking about CSL for the best part of the last year, saying we're going to buy this thing under 270, drew that line in the sand. What changed my mind now? Well, obviously, it's under 270, but really bouncing off its March low around 242, really trading at a forward multiple roughly in line with its longer-term average, representing about 20% upside to our name. I'm going to put that $28 savings off the ground here. I'm going to be more constructive on CSL. Now, why has it actually been a weaker performer? I'm obviously stating a lot of things that are well known across the network. However, I think it's important to point these out, both internal and external. The internal ones, obviously, there's a supply-demand imbalance more for its plasma products. Now, this is the raw material that fuels 70% plus of CSL's products. This is really derived out of donations coming mainly out of the United States, and we have increasing costs of those donations. So those are the internal issues. The external issues, I think the network is well across. Obviously, Portal just talked about that the value trade, kind of the growth is kind of on the nose right now, the growth stocks. We have fiscal stimulus coming out last night, the $1.9 trillion Obama plan, got approved in the House. Now it goes to his desk. He should sign that by Friday, U.S. time. So that's raining $1,400 to people's banks accounts. So helicopter money is coming in as well. And I'm going to talk about the emergence of coronavirus variants or mutations. Now, I talked about this before numerous times, but I think it's very important. And now this is par for the course. This is what the virus does, especially with the RNA type virus that the coronavirus is. And you can expect that, but I don't believe the market is really fully appreciating what's going on with that. And I'll talk about that more, as I said, in a second. So there's a lot going on, but really the market's focus clearly for CSL, we believe, is on the plasma collection side. As I said, really derives the majority of its products. Now, just a reminder, coming out of the half-year result, they were saying that those plasma collections are down 20% in December. Now, since that time, they haven't really improved that much, given the inclement weather we have seen in the States. So it's a little bit lumpy right now. So there's a lot of ongoing concern around the timing of when things right-size. On the positive side, you do have the rollout of the vaccines in the U.S. It's been a little lumpy out of the gate, as you'd expect, as it is here as well. But they're doing over 2 million doses a day, now targeting the herd immunity about 6 months down the track, give or take. That's a net positive, obviously. But more on the negative side, I would say that even though the U.S. case numbers, hospitalizations, and death rates have all come down, and I'll point out that was prior to the vaccination rollout. I could talk about that offline, why that reasoning is. So the numbers are still pointing in the right direction, but the U.S. is still printing 40,000 infections a day, so it's still not out of the woods quite yet. You had 16 U.S. states reopening its kind of restrictions. A lot of the governors came out and said enough's enough, no masks, no social distancing, we're 100% open for business. So that can be construed as, or looked at, as a premature kind of opening right there. And of course, those coronavirus mutations are still growing by the day, all pointing to potential resurgence. That's the last thing we want to hear, actually, in case numbers. So something to look out for there. So this is a race. It's a very strong race to try to get at least some kind of control over this virus, but it's a very difficult battle. It's not really a question of if, it's a question of when the virus makes the vaccines obsolete. Now, I know no one wants to hear that, but the problem is the vaccines, the current vaccines that is, have all been predicated on the Wuhan sequence that came out in December 2019. So as the virus does what it does, it mutates, it's going to mutate around the vaccine. So that's guaranteed. It's just, can we get on top of it before this happens? Not to put fear into people, but the pharmaceutical companies are working on boosters. So that's a positive. And I said before from day dot here that this is going to be an endemic disease, that we're going to have annual boosters to help control this. And that's where we're heading to. And not that being said, there's other pharmaceutical interventions that look pretty good. Even overnight, Eli Lilly came out with a combination antibody that seemed to work really well. 7% reduction in hospitalizations and deaths in highest risk people. So net, that's all looking pretty good. However, there is risk, as I said, of resurgence of the virus, which is keeping back of our heads there. Now, beyond plasma collections and the virus resurgence, I want to talk about the Securus business. Now, this is a second part of CSL's business, so let's move away from plasma for a second. Securus is, and that's about 15% of the total profit of the business, so a smaller piece, but not insignificant. Firing on all cylinders, doing quite well, and I believe there's more upside in there. Now, I'll have all the nitty-gritty in the note, and you can read that at your leisure. But really, the thing is that I want to point out, which is ironic, is that during this whole coronavirus pandemic, we've had very, very low cases of upper respiratory tract infections, namely influenza or respiratory syncytial virus. It's an even one leading cause of bronchitis in young kids. So those have kind of fallen by the wayside. And everyone asks me all the time, why is this? Why are we seeing? Maybe it's due to social distancing, or we're not labeling correctly, et cetera, et cetera. But needless to say, it's good and it's bad. Obviously, it's good in the mere fact that we have hospitalizations and flu cases are down. The deaths from influenza, as I said before, 500,000 around the planet. Those have gone by the wayside, which is good to see. However, the problem is when you limit our exposures to the circulating strains, you have a potential for a resurgence or more severe strains down the track. So you can't kind of get out of it. So unfortunately for us, the race, it's not a positive thing, but for the likes of CSL, a huge beneficiary with more seasonal vaccines, because that's what they work in. They're not working necessarily in the coronavirus vaccine outside of their collaboration with AstraZeneca. That's a cost plus, so it doesn't really move the dial that much for CSL. It's the influenza vaccines, and they're looking to be quite strong, I think, in the coming years, if not only this coming up Northern American flu season. So we didn't really make any changes earnings-wise to our numbers. We have taken more, as you expect, a conservative approach to modeling our return of the plasma collection business. We're estimating a 15% volume decline. This is through the first half of fiscal 22, and we do moderate it in the second half of fiscal 22 as well, 5 to 10% down. So that's still down on our numbers on a year-over-year basis. So looking at fiscal 22 profit growth, we're at 7%. Consensus is at 10. So I'm assuming consensus, that's a 3-point difference, obviously. Consensus is baking in a right sizing of, or a normalization, I should say, mid this calendar year. So full plasma collections back in the second half of fiscal 22, which we think are overly optimistic. So I would say bottom line, CSL arguably the best, I would say, best in-class operator across the plasma-based businesses, should be a core portfolio holding in anyone's portfolio. However, here, I'm not pinning back my ears. People say, should I just back up the truck? Not necessarily. I'm definitely chipping in without question. It looks interesting at these levels. However, it's really figuring out how the pandemic is still going to play out with the vaccine rollout, as I just kind of talked about. And I wanted to point out quickly before I leave, don't let overlook constant defensiveness in our clients' portfolios. I think right now it's about risk mitigation, downside protection. We do like Sonic at these levels as well. ResMed, I'll talk about. 2 ticks. Definitely long-term thematic there. The upcoming quarter is going to be challenging. As I said, I'm more trimming ResMed, but it has fallen quite a bit. But those quarters are hard to stomach at the best of times, but I'm a long-term buyer there. We did flip Ansell as well to an ad during this earnings season. It has the best of both worlds, both on the personal protection equipment side, as well as the reinflation trade. So I'm adding 2 positions in Ansell. Those are 3 other names I think all clients should have in their portfolio.